Hey guys, I wanted to do a quick white zone review tonight in the markets of the 30-year note, the S&P 500, crude oil, and the NASDAQ 100. And it was a mixed day for me today. So this is what I'm going to do. For those of you who just want the numbers from the white zone, I'm going to cover the white zones first, right? And for those of you who want to stick around, I'm going to post this in the members room. I'm going to do both the members homework review and the trade review combined. So here's the important part. I'll give you the numbers. The objective of the white zone is so that traders that don't have a lot of experience or have a difficult time discerning where they want to trade in the market or finding targets up and down, those white zones provide both great targets and great counter location trades, right? And that's the objective of having the white zone. So let's jump into it. Before we do that, I want to be very clear. The trade plan that I'm discussing is my trade plan. I'm going to throw this up for the obligatory. Wow, I can't even say that word. I don't even know what's wrong with my mouth today, but I certainly can't say the obligation to throw this up for a minute. There we go. Talk about embarrassing myself a little bit, but if I was really had a weak personality, I certainly would not be in this business. So this is for educational purposes only. Past performance is not indicative of future results. Don't trade with money you cannot afford to lose. Can't say anything more than that. So ES only hit one white zone today. It hit it right at the very end of the day. Rotation, you want to put that down in your notes. We tagged 24.27, right? We took about 2 ticks of heat and it rotated back to 24.23, right? For a total of 4 points of rotation down at the very end of the day. Again, this is only a review of the white zone, nothing else. I'm going to go into a more detailed review once I'm done. Let's go look at the NASDAQ. The NASDAQ was not as pretty. So this morning, we opened up. NASDAQ pushed right into the white zone. The white zone contained it for 15 minutes, and it blew through for a stop. And in my particular case, that's 10 points. And so that's $200 a contract that I took a loss on the NQ. Again, that's 2 days in a row where I've had a little bit of difficulty with the NASDAQ 100. It's not unusual that it has a higher loss rate than the S&P 500. It's just that the win rate, the risk reward on the stretches is much higher there. But you have to be willing to tolerate. You have to do 2 things. You have to be willing to tolerate more losses. And the second part of that is you have to leave trailers to catch your risk reward when it moves in your direction. I'll cover that in the trade review in just a moment. So let's call this, even though it held it for 15 minutes, and I expect early in the morning the rejection to be quicker, that's a, let's just mark this as a loss to be fair to everybody, right? You could have covered here after we pushed in for 15 minutes at backside tested. You could have audibled out, but I generally like to stay disciplined and see if it'll push out, particularly because the S&P 500 was relatively weak this morning. Let's go look at the 30-year note. So the red zones are not trade locations, they're points of interest, right? Again, remember the white zone is key for when we get a stretch into a white zone. I expect a counter rotation. We only got in this 24-hour period. You can see that we had 2 examples of that, and that's really, really important that we, let's pull this down a little bit. So this is the first push down. You can see it moved a couple of ticks, 23, 30 seconds. It moved back to 20, 30 seconds to retest Monday's low from the back of the zone. And it then, throughout the U.S. session, right, once we got in, it was chopping around. By the time we got in, this is where the market opened, 720. So you can see the zone held in the U.S. session, and it did push out. However, again, wanting to be transparent, I said in the morning, hey, we've chopped in here all night long, and unless we get an extension out of this location, I really don't want to be trading the U.S. Note unless we extend to one of the white zones above or below, and it simply did not do that. Now, as Brian pointed out in the room very clearly, he's like, hey, we stretched all the way back up to retest Friday's high, and we've stretched all the way back down to the white zone. You can really see the effectiveness right here of this push. Had you taken the top of the white zone, 151, 27, 30 seconds, it pushed all the way back to 152 and 730 seconds. That's 3, 4, 11 ticks times 33. That's almost $333 per contract on this move out of this location. Again, same with the initial move from the overnight. It took forever in the overnight, but that's not unusual with the bond market, right? And I really prefer to trade the bonds during pit hours. Okay, and then finally, let's look at CL, right? So that's 333 potential on the 30-year note. So this was interesting, and this is going to take us a minute to go through, right? This is the overnight session. This is the overnight session in CL. We opened in the white zone in Asia, right? This is London Open right here, 2 a.m. So you can see the white zone's been well tested. We've consolidated in there. And then we push right up. The zone is 44.91 to 45. And you can see we push. I want to highlight this so everyone can see how accurate this was. So remember, the objective is to grab the zone once in the overnight session, once in the RTH session, right? So this zone pushed out, has already been tested, right? We push up to 44.91. We complete up to 44.91, right? Reject right out of 44.91. Again, these zones are posted in the evening. And now look at the rotation on this chart, right? If you leave a trailer on this, you got a potential win from 44.91. If you're going to target the 44.62 back, there's nothing wrong with that. You can see, I want to highlight this in London. You can see that 44.62 held for quite a while, right? So here's 5, 10, 15, finally 20 minutes before it gave up the zone and busted, right? Again, for more sophisticated traders who are using the white zone for entry and then have the ability to, quote, read the market or read the PA, you had a potential maximum extension to the downside here from 44.91 all the way back down, and I don't know the low of the day, but we're going to punch it up right here, all the way down to 43.85, right? So that's almost a 100 tick move to the down. Actually, it is a 100 tick move to the downside from the white zone. First touch, right? This is second touch, blows through, attempts to hold on the second touch, but blows through. And that, by the way, answers the question, right? Some traders always ask me, can you take the second touch of the zone? And the answer to that question is yes, sometimes you can. But again, the objective is for newer traders, first time into the zone, one stop, limited number of trades per day, so you control your P&L and you constantly get high odds trade locations where you have a high chance of being able to pull money out of the market, right? And then, as you can see in the afternoon, my first trade of the day, which took place in the U.S. session, this is 8 a.m. open, right? And even before we got here, I was already sitting here at 44.40 for the backside test of this location. You see we pushed in. I did take a little bit of heat on this trade right here. So 44.40, and I took heat all the way back to 44.55. So I took 15 ticks worth of heat. Remember, I put my stop behind the back of the zone, right? So I did take 15 ticks worth of heat, right? And my initial scale was 44.30 right here, okay? So I'm going to dot that line for you. Okay, so that's $100 a contract. And then I scale at 44.30. Some of the people in the room scale earlier at 5 ticks, and some of the people took the, okay, so not everyone can afford the stop that goes with the zone, right? Some zones are narrower, some are wider. So some traders had to push back into the middle of the zone to be able to grab the trade. And so those guys were able to get more out of the trade, but I entered at 44.40. I was able to get 10 ticks out of the trade on my first scale. And then I moved my stop to break even. It was clearly stopped. And again, part of the reason I did that was the total environment. You know, the bond was chopping. It just wasn't clear to me today. And I can't stress enough in my trade plan. When I'm not clear, I play defense. I don't want to lose money. I encourage my coaching clients when they're unclear, don't lose money. Don't do it. Okay? And there's no reason to blow up. There's no reason to have big drawdowns. And I'm very, I do believe in letting your trailers run, but only when you're absolutely clear on the read and you know you have high odds of letting the trade work out. Now, watch when we push up next. Now, I missed my next trade, but this is case in point. And I didn't miss it as in didn't have an order in. My order was 44.91, 44.90 was the high tick. It's really painful when you miss an entry by 1 tick. I missed this entry by 1 tick. This was worth from 44.90 We rolled all the way back to just past 44.60, $400 a contract. Again, and the other thing you would have seen here is this is a great example. Had I been able to get filled, you would have seen that, take the initial 10 ticks, move the stop to break even, and let the trailers work. And where's the target, right, guys? I can't stress this enough. Where's the target? Target is the top of the white zone, right? Just like you could have done in Europe. That's a 40 tick trade, $400 a contract. And then notice it comes right to the back side, right? And then rotates right up off the top of the white zone from 44.62. This is I'm going to count this as the second touch, right? We came within 1 tick of the zone. This is the second touch. We're clearly in trend day up. We go from 44.62. Now I want to show you this. This is important. We touch this zone, or just within 1 tick of it, reject, push up from 44.62, and look where we push in the after hours to the next white zone, 45.65 to 45.89. Again, for my swing traders, if you took this trade, right, from the entry, your 10 ticks, you move your stop to break even, and you let it trail up, right? If this was your initial trade, you had a maximum favorable excursion, meaning how far the trade could have potentially moved in your favor, right? All the way up to almost 45.30 from 44.62. That's, let's just call that 70 ticks, $700 a contract. The market then rolls back, tags into the white zone. Now, here's where there's conflict, right? First touch onto the backside of this trade gave a rotation back up from 45.01 to 45.10, right? Actually 45.11, exactly 10 ticks, right? Now, here's the issue. If I don't get my 10 tick scale here, I leave my original stop. Where's my original stop? It's back behind this zone. I would have not re-entered this trade here, but once I was able to scale my 10 ticks, I would have moved my original stop back to my break even. I would not have held, this is the rig, this move came off the rig count. I would have not held that trade under any circumstances. I would not have been holding into news. There's no way I could have achieved this myself, but this does express the power of the white zone beautifully. So going through the count, the only failure on the white zone was the NASDAQ today. If you took the first touch of the white zone and every other product, you got paid. That's all there was to it. Bonds, no failure. Crude oil, no failure. Maybe a failure to miss entry, but first touch from each direction paid you today. That's very, very valuable. And then the S&P 500, the ES, one touch, you had a maximum potential trade reward of, let's see, 1, 2, 3, 4 points. Okay, so that's it, guys. That's the count on the white zones. And actually, what I'm going to do is, instead of doing that, I'm going, actually, I guess I promised everyone I would do a larger trade review, but what I'm going to do is just post the white zone, and then I will do a second recording here in a moment, catch my breath, and do a public trade review of when things are difficult and how to handle that, because I think everyone could benefit from that. So anyway, I'll be back in a minute with another recording. Talk to you in a little bit.